Financial stress, health impacts, and solutions. Understand the physical and mental toll of financial stress. Have you ever stayed awake at night thinking about money? Maybe it's a growing pile of bills, an unexpected emergency debt that never seems to shrink, or simply wondering if you will have enough for the future. If your answer is yes, you are far from alone. Across the world, millions of people experience financial stress regardless of their income. Surprisingly, financial stress does not only affect people with low incomes. Even successful professionals, business owners, students, and retirees experience anxiety about money. The real danger is that financial stress silently affects our physical health, mental well being, relationships, work performance, and even our life expectancy. Many people treat money as only a financial issue, but in reality, it is also a health issue. In today's video, we will explore how financial stress affects your body and mind, why it happens, and most importantly, practical solutions that can help you regain control. By the end of this video, you will understand that financial freedom begins not just with earning more money, but with creating peace of mind. Let's begin. Point number one, understanding financial stress. Financial stress is the emotional, mental, and physical pressure caused by money related problems or uncertainty. It occurs when people feel they don't have enough resources to meet their financial responsibilities or future goals. This stress can arise from job loss, debt, inflation, medical expenses, education cost, housing payments, or simply fear about the future. Financial stress is not determined by how much money someone has. Two people earning the same income can experience completely different levels of stress depending on their spending habits, savings, responsibilities, and mindset. Some individuals constantly worry despite having significant wealth, while others remain calm with modest incomes because they have healthy financial habits. Our brains naturally interpret financial uncertainty as a threat to survival. Thousands of years ago, survival depended on having enough food and shelter. Today, money has become the modern symbol of security. When we feel financially insecure, our brain activates the same stress response used to escape danger. Over time, this constant state of alert becomes harmful. Instead of solving financial problems, excessive stress reduces clear thinking and often leads to poor financial decisions. The first step toward reducing financial stress is recognizing that it is a normal human response. Acknowledging it allows us to take constructive action rather than ignoring it. Example, imagine Sarah, a young teacher earning a stable salary. She constantly worries about unexpected expenses because she has no emergency savings. Even though she pays her bills on time, the uncertainty causes daily anxiety. It's not about income alone, it's about financial preparedness. Next, point number two, how financial stress affects the brain. Financial stress indirectly impacts brain function. When we are worried about money, the brain releases stress hormones such as cortisol and adrenaline. These hormones are helpful during emergencies, but when they remain elevated for weeks or months, they begin damaging our mental performance. High stress reduces concentration, memory, creativity, and decision making abilities. People often become frightful, impatient, and emotionally reactive. Simple financial decisions become overwhelming because the brain focuses only on immediate survival instead of long term planning. Financial stress also increases the likelihood of anxiety disorders and depression. Constant worry creates mental exhaustion, making it difficult to enjoy life or maintain optimism. The brain becomes trapped in a cycle where stress leads to poor decisions. Poor decisions create bigger financial problems, and those problems create even more stress. Breaking the cycle requires reducing both financial uncertainty and emotional pressure simultaneously. Example, David receives multiple credit card bills every month. Instead of opening them immediately, he delays reading them because they increase his anxiety. The delay results in late payment fees, making his financial situation even worse. Next, point number three, physical health consequences of financial stress. Financial stress does not remain inside the mind, it affects the entire body. Chronic stress raises blood pressure, weakens the immune system, increases heart disease risk, causes headaches, digestive problems, muscle tension, fatigue, and poor sleep quality. Many people suffering from mental stress experience insomnia because their minds continue calculating expenses long after bedtime. Lack of sleep further weakens emotional resilience and physical health. Such hormones also increase inflammation throughout the body, contributing to long-term illnesses. People under financial stress make skip medical checkups or medications due to cost concerns, allowing health problems to worsen. This creates another dangerous cycle where Poor health reduces earning ability, leading to even greater financial pressure. Taking care of physical health is not luxury, it's a part of financial management because healthy people are generally more protective and financially resilient. Example, Maria postpones visiting the dentist because he wants to save money. Months later, the untreated problem requires expensive surgery, costing far more than original treatment. Next point number 4, emotional and relationship impact. Money is one of the leading causes of conflict in families and relationships. Financial stress often creates frustration, anger, guilt, shame, and hopelessness. Couples may argue about spending, debt, savings, or financial priorities. Parents experiencing financial stress may unintentionally transfer their anxiety to children. Children often sense tension even when adults don't discuss money openly. Financial stress also affects friendships and social life. People may avoid gatherings because they can't afford to participate or feel embarrassed about their financial situation. Isolation increases emotional distress, making recovery even more difficult. Healthy communication about money reduces misunderstanding and strengthens relationships during a difficult time. Example, a couple argues every month because one partner spends impulsively while the other prefers saving. After creating a shared monthly budget and discussing financial goals openly, their arguments decrease significantly. Next point number 5, financial stress and workplace performance. Financial stress often follows people into the workplace. Employees distracted by a financial worries struggle to focus, make more mistakes, and experience lower productivity. Stress reduces motivation, increases absenteeism, and contributes to burnout. Some workers take additional jobs, leaving little time for rest or family. Business owners also experience financial stress through cash flow problems, uncertain markets, and employee responsibilities. Employers increasingly recognize financial wellness as part of employee well-being because financially healthy workers perform better. Improving personal financial management benefits both individual careers and organization success. Let's say example, an employee worried about overdue loan payments spends several hours each week handling financial calls during work, reducing overall productivity. Next point number 6, common causes of financial stress. Financial stress usually develops from multiple factors rather than one single event. Rising living cost, unemployment, unexpected emergencies, excessive debt, poor budgeting, lifestyle inflation, inadequate insurance, and lack of financial education all contribute. Sometimes financial stress comes from comparing ourselves with others on social media. Seeing luxury lifestyles creates unrealistic expectations and unnecessary spending. Many people also avoid discussing money because of embarrassment, allowing small problems to become major crises. Recognizing the true source of financial stress helps identify appropriate solutions rather than treating only the symptoms. Financial awareness replaces uncertainty with clarity. Example, James buys expensive gadgets to match his friend's lifestyle. Within a year, he accumulates significant credit card debt and experiences severe financial anxiety. Next point number 7, practical strategies to reduce financial stress. Reducing financial stress begins with taking small, consistent actions. Create a realistic monthly budget that prioritizes essential expenses. Build an emergency fund gradually, even if you start with very small amounts. List all debts and develop a repayment strategy. Avoid unnecessary spending and distinguish between needs and wants. Automate savings whenever possible to reduce decision fatigue. Learn basic financial skills through books, online courses, and trusted educational content. Celebrate small financial victories because progress builds confidence. Remember that financial improvement is usually gradual rather than immediate. Example, Emily saves only $20 each week. After 1 year, she has built an emergency fund that prevents her from using expensive credit cards during unexpected expenses. Next point number 8, protecting your mental health during financial challenges. Mental health deserves equal attention alongside financial recovery. Practice mindfulness, meditation, exercise, and adequate sleep. Talk openly with trusted family members or friends about financial concerns. If stress becomes overwhelming, seek support from financial counselors or mental health professionals. Avoid making major financial decisions while emotionally distressed. Give yourself time before making expensive purchases or investments. Focus on what you control today rather than worrying endlessly about uncertain future events. Resilience grows through consistent healthy habits. Let's say example, instead of hiding his financial worries, Michael joins a financial support group where members share budgeting strategies and emotional encouragement. Next point number 9, building long-term financial resilience. Financial resilience means preparing for future uncertainty rather than expecting life to remain stable forever. Diversify income sources whenever possible. Continue learning valuable skills that improve employability. Maintain insurance coverage, build retirement savings, and regularly review financial goals. Develop habits that prioritize long-term security over short-term gratification. Financial resilience is not about becoming rich overnight; it's about becoming adaptable. Every healthy financial habit strengthens future stability. Example: Linda develops freelance skills alongside her full-time job. When her company downsizes, her additional income prevents financial panic. Next point number 10: turning financial stress into financial strength. Financial stress can become a powerful teacher. Many financially successful people experienced a significant financial hardships before learning better money management. Instead of viewing financial problems as permanent failures, see them as opportunities to improve financial knowledge and habits. Every budget created, debt reduced, emergency fund built, and financial lesson learned increases confidence. Progress may feel slow, but consistent improvement changes lives over time. Financial peace is not determined by having unlimited money, it's created by having a clear plan, healthy habits, realistic expectations, and confidence in your ability to handle future challenges. Your financial journey is a marathon, not a sprint. Example: after losing his job, Alex completely reorganizes his finances, learns new digital skills, starts a side businesses, and eventually reaches greater financial stability than before his setback. Finally, financial stress is one of the most common challenges people face, but it does not have to control your life. Money affects your health, relationship, career, and happiness. But the good news is that financial habits can be learned and improved at any age. Remember these key lessons. Financial stress affects both your mind and body. Awareness is the first step toward change. Small financial habits create lasting improvements. Building resilience matters more than chasing perfection. Financial peace comes from preparation, not just income. Every positive financial decision you make today is an investment in your future health and happiness. If you found this video valuable, like, share, and subscribe for more practical lessons on personal finance, wealth building, and financial literacy. Leave a comment below. What is the biggest financial challenge you have overcome, or what financial habit are you working on right now? Thank you for watching, and remember, your financial future is shaped by the decisions you make today. See you in the next video.